Hey Samfam, this is Shreya from Samaya. Today we are going to discuss Essay 200, Overall Objectives of the Independent Auditor and the Conduct of an Audit in Accordance with Standards on Accounting. Okay, this note was prepared under folder note system so that it's easier to find information or retrieve the information when we give examination. And first we'll see the summary here. Summary is something for the quick reference what all the contents in the PDF, and you could see this. It was mainly designed to see one day before the examination. First we'll go with the summary here, and then we'll go in detail to the Essay 200 series. The purpose of an audit is to enhance the degree of confidence of intended users in financial statements. That is why audit. What's the purpose of audit? Purpose of audit is to increase confidence in financial statements. That is more about reliability. This is achieved by expression of an opinion by the auditor on whether financial statements are prepared in all material aspects in accordance with applicable financial reporting framework. That is auditor what how could auditor build confidence? He could build confidence. He have to check whether the material in all material aspect the financial statements were prepared in accordance with applicable financial reporting framework, and SEs require the auditor to obtain reasonable assurance. This is reasonable assurance about whether the financial statements are whole as a whole are free from material misstatement, whether due to fraud or error. Reasonable assurance is a high level of assurance. It is obtained when the auditor has obtained sufficient and appropriate audit evidence to reduce audit risk to an acceptably low level. This, however, reasonable assurance is not an absolute assurance because there are inherent limitations of an audit. What are inherent limitations like sampling or management had very well curated the fraud so that it was not very identifiable unless you would go for a due diligence or an investigation. And which results in most of the audit evidence on which the auditor draws conclusion and bases the auditor's opinion being persuasive rather than conclusive. Persuasive rather than conclusive. The auditor, in obtaining reasonable assurance, you see, this is not why they were saying persuasive is that the auditor is giving his opinion, opinion on what all the audit evidence that he had acquired, and what's it's not that the there doesn't exist a fraud. There might exist a fraud in what all the things he had not audited or not taken into consideration because of sampling. So it's not it's a conclusive decision. It's just a persuasive opinion. Auditing obtaining reasonable assurance, what he have to do? He has to identify and assess the risk of material misstatement. SC 300 series, whether due to fraud or error, based on understanding of the entity and its environment, including the entity's internal control. 300 series 315. Obtain sufficient appropriate audit evidence about whether material misstatement exists through designing and implementing appropriate responses to the assessed risk. They were talking about all the 300 series. Form an opinion on financial statement based on conclusions drawn from the audit evidence. Okay. If you write all the names of the 300 series, 300, 315, 330, then you will get this answer. Detection risk. What is the detection risk? Detection risk is that the auditor is not able to find the misstatement or not able to detect that misstatement that was already existed. The risk that the procedures performed, that procedures means audit procedures performed by the auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists and should be material either individually or aggregated with other misstatements. That is, the auditor had performed some procedures which he think they were reduce the risk to an acceptably low level, but they cannot detect the material misstatement either if you think that's individually or whether aggregated with other misstatement is a detection risk. And what are the responsibilities of management? We know that what the management should do. They have to prepare financials. They have to design, implement, and maintain the internal controls. And they have to find out what's the applicable financial reporting framework they have. And we'll see what all the things that were given here. It is the design, implementation, and maintenance of internal controls relevant to the preparation and presentation of financial statements that are free from material misstatement, whether due to fraud or error. What's they are saying? They are saying to implement internal control and prepare financial statements. That's it. To provide the auditor with. This is before the audit. This responsibilities is before the audit. What? Before the audit, they have to do financial statements and implement internal control system. While during the audit, with regards to auditor, what he has to do, what the management has to do, what the responsibilities of management is, provide all information such as records, documentation, other matters that are relevant to the preparation and presentation of financial statement. Any additional information that the auditor may request from management, like written representations, and unrestricted access to those within the entity and from whom the auditor determines it is necessary to obtain audit evidence. Okay, this is information, this is additional information and unrestricted access. And we all know that audit risk is risk of material misstatement plus detection risk, and risk of material misstatement is inherent risk plus control risk. Control risk here is internal control risk. And this is a summary of SA 200, and now we'll go in deeper and we'll discuss deeper the scope of the audit. What's the scope of this audit as per SA 200 is that the auditor's opinion therefore does not assure, for example, the future viability. What the auditor, if auditor is giving opinion of on the financial statements and giving an unmodified opinion, it does not assure the future viability of the entity or efficiency or effectiveness with the management has conducted with the affairs of the entity. This is not the responsibility of the auditor. It's not the responsibility of the auditor. The future viability of the entity and efficiency and effectiveness of management conducting affairs of the entity. These two were not the responsibilities of the auditor, or the responsibilities of the auditor form an opinion on the financial statements, whether etc. What we know, right? Preparation of financial statement. Design, implementation, and maintenance of internal control relevant for preparation of financial and preparation and presentation of financial statement that are free from material misstatement, whether due to fraud or error. And this is what the responsibilities of the management is: to provide the author with all information, additional information, and unrestricted access. And how could the management know? Sources that provide direction on application of applicable financial reporting framework. How they know about the applicable, what's the applicable financial reporting framework is? Due to their, from their legal and ethical environment, and published accounting interpretations, published views of various authorities on emerging accounting issues. And this is what for the management, not for the auditor. How management knows their applicable financial reporting framework is from the legal and ethical environment, and published accounting interpretations and accounting issues, and general and industrial practice that is recognized and relevant, and accounting literature. And professional skepticism examples. We know that while performing the audit, auditor shall have professional skepticism throughout the throughout the audit. What's professional skepticism is like a questioning mind. Audit should not be done like an investigation, like with a preconceived notion that something wrong had already happened or something wrong that's going to happen. But he need to have some professional skepticism, like a questioning mind, like reasons whether they were reasonable or not, or these rules or implementation controls whether reasonable or not. The audit evidence that contradicts other audit evidence that was obtained. So how he have to when this questioning might should trigger, when professional skepticism should trigger, why he have to question out what all the points he have to trigger is that when two audit evidence were contradicting, when the information that brings into question the reliability of documents and responses to inquiries to be used as audit evidence. That is, he had got some information and from and some responses to the inquiries. What they were triggering is that they're triggering the reliability. Like he had got some forged documents or responses from some other uh, unauthorized party. Likewise, if he get that, he have to trigger his professional skepticism or questioning mind. Conditions that may indicate a possible fraud should trigger professional skepticism. Circumstances that suggest the need of audit procedures in addition to those required by SEC. That is, management was not accessing to few people or few debtors in order to check their outstanding balance. What he have to do, he have to first, if you have to write in a 4 marks question, what we have to do for that? Well, first we have to ask for the reasons. We have to check whether the reasons were reasonable or not, and we have to, if they were reasonable, we have to follow the alternate procedures. They're asking about, they're saying about this here, and if they were not reasonable, they have to check the integrity of the management, integrity or reliability or of the written representations that were given by the management. And if he found a doubt or he thinks there was any kind of flaw, he have to leave the engagement. And if they were, you have to communicate with any kind of regularities or communicate with TCWJ, etc. This is what, how you have to write. Mostly the outline of everything was the same for the audit, but what we do is that for the audit, we think every individual question has an individual answer. That doesn't happen. It's like audit is mostly like a behavioral science. If you know how to do some procedures, or you have to know how to live in that situation, you could easily write. And most of the audit answers, except few, like here the sources that were provided, except like these few direct questions, most of the case based scenarios were mostly outlined in the same way, same direction. Okay, why the auditor need to have his professional skepticism, why need to have a questioning mind? So that he should not overlook the unusual circumstances, not overgeneralizing everything, conclusions that were drawn, and using inappropriate assumptions and determining the nature, timing, extent of audit procedures. Mostly they were saying, talking about the same thing here. He should not overlook such circumstances, and he should not overlook the audit evidence, or overgeneralize the conclusions or about the audit procedures he have, inappropriate audit procedures. What is professional judgment? Professional judgment is essential for the proper conduct of audit. When he has to use professional judgment with regards to evaluating the risk of material misstatement, materiality, and audit plan, and what the extent, nature, timing, and extent of the audit plan, audit procedures, or audit program. So materiality, yeah. While checking the materiality in the audit risk, nature, timing, extent of audit procedures in order to meet the requirements of standards on auditing, and evaluating whether sufficient and appropriate audit evidence has been obtained or not, and whether the overall audit objectives have been achieved or not, and evaluation of management judgments, whether in applying applicable financial reporting framework, and drawing conclusions based on the evidence obtained. For these, he need to use his professional judgment. And what does talking about sufficient audit, sufficient and appropriate audit evidence? Sufficiency with regards to the quantity. Mostly sufficiency is based on the materiality level and the risk of the material misstatements, and appropriate is mostly relevant, that's a quality of the audit evidence. Sufficiency and appropriateness of audit evidence are interrelated, as obviously. Sufficiency is a measure of quantity of audit evidence. The quantity of audit evidence is needed. The quantity of audit evidence needed is affected by auditor's assessment of risk of material misstatement. Yes, more the risk, more the quantity. Lesser the risk, lesser the quantity. Obtaining more audit evidence may not compensate for its poor quality. That is, the audit evidence should also be relevant enough. Appropriateness is a measure of quality of the audit evidence. The reliability of audit evidence is influenced by its source. If that source is from a third party or independent party or individual entity, that is more reliable than by the written representations that were issued by the management. Make sure whenever you get any written representation from the management, what you have to think is that that is just a corroborative. That's just an evidence. What that does not alternate. It's not an alternative for the audit procedures that you have to perform. So you have to perform the alternate audit procedures. If you have any written representation from management, that doesn't suffice for the audit procedure by its nature, and it's dependent on the individual circumstance which it is obtained. Okay, or they're talking about the audit risk now. The assessment of risk is a matter of professional judgment, yes, rather than matter rather than a matter capable of precise measurement. It's mostly a professional judgment, not a precise measurement. Audit risk is a technical term related to the process of auditing. It does not refer to auditor's business risk. They are talking about not the business of the auditor's risk, whether he could appoint the next term also as in a statutory auditor or as a not. And with regards to the risk of material misstatement, the risk of material misstatements are exist in two levels. That's a financial statement level and an assertion level. The risk of material misstatement at an overall financial statement level relate persuasively to the financial statement as a whole and potentially affect many assertions. The risk of material misstatement at an assertion level consists of two components: inherent risk and control risk. Financial statement level is like a whole, like all the items that were in the P&L or all the items that were in balance sheet. But for an assertion level, a particular item in the balance sheet or particular item in the P&L, like a trade payables or trade receivables or kind of a closing stock or scrap. Likewise, now we are talking about the inherent risk. Inherent risk is suspectability of an assertion about a class of transaction or account balance or a disclosure. As we have said, that assertions at an assertion level consists of two components like inherent and control risk. This relates to inherent risk, also interrelates with this, and the disclosure to a misstatement that could be material either individually or aggregate with other misstatements. This is mostly a misstatement in order to call it a material. They were using these adjectives, that is, whether individually or with aggregated with other misstatements, it is material before consideration of any related controls. That is, it could be wrong. A particular transaction or an account balance or particular disclosure could be a misstatement. What is a misstatement? Misstatement is something that is prepared by the management versus that is required to be prepared by the AFRF. What's a control risk? Control risk is a risk that a misstatement that could occur in an assertion about a class of transaction, a account balance, or a disclosure that could be material either individually or with aggregated with other misstatement will not be prevented, detected, or corrected on a timely basis by entities' internal control. Internal controls, what they have to do, they have to prevent, detect, and correct any material misstatements or any kind of errors that they have occurred. Detection risk, the risk that the procedures performed by the auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists and that could be a material individual, either individually or aggregated with material with other misstatements. You see, control risk is not preventing, detecting, and correcting any material misstatements. Detection risk is control risk is the internal audit, internal control that was implemented by the management is not preventing, detecting, or correcting the material misstatement. Detection risk is the audit procedures that were performed by the auditor but not detecting the misstatement, which is material, individually or aggregate. What are the inherent limitations of an audit? The nature of financial reporting, nature of audit procedures, the need of audit to be conducted within a reasonable time period. This is what nature of what? Financial reporting audit procedures and with regards to time and any kind of fraud or related party transaction or non-compliance or future events that may cause an entity to cease and to continue as a going concern. These were the inherent limitations of an audit. Have you seen about the going concern somewhere in this? As starting, these were not the responsibilities of the auditor. What are not the responsibilities? Future viability and efficiency and effectiveness of how management had conducted the affairs of the entity. So these were the limitations. This is inherent limitations of an audit: non-compliance related party transactions and relationships, frauds, and the time and nature of financial reporting audit procedures. And this is with for the SA 200 series. And hope you had a quality time and all the best for your preparation. And please do share it with your friends and leave it like, and please do comment on what all the topics you wanted next, and please do subscribe and participate in our Telegram channel. We are posting daily MCQs